Good evening, everybody, and welcome back to Serene Education. Thank you very much for joining us this evening. Before we start this presentation, may I please ask that you read through our disclaimer. By continuing with this presentation, you are agreeing to the terms and conditions within. Well, can you believe that we're halfway through January already? It was only last week that I was saying, well, it's the beginning of the year, it's the greatest time to start creating your plans for 2015, and all of a sudden you blink and we're halfway through January already. So if you haven't done that already, I suggest that you start putting together that very quickly. I think we've got quite a few new people again on board with us this evening, which is great. I'm not going to go into too much detail about Chris and who we are. I hope that you have watched the last week's webinar that was sent out to everybody. Chris and I are both from South Africa. Chris came in 1999 to the UK. I came across in 2001. The thing about us, I think, that makes us maybe different to a lot of the other companies out there is that Chris and I were once in a situation where majority of you are right now, working for somebody else, working extremely long hours, and trying to make a living out of working really hard for somebody else. And things needed to change, and that's why we got into trading. And it's from there that things have really changed for us, and that's what we now are doing as a company and as individuals, is trying to inspire other people to believe in themselves, to believe that they can do what we've done, because it is achievable. As long as you're prepared to put in some work, it really is achievable. So many people ask us, why do we trade? And you know, I can go through the simple things like it's the biggest market in the world, you require less money to get started in comparison to the stock market. There's fewer tradables than the stock market. For instance, there's the four major currency pairs: your euro, US dollar, pound, US dollar, Swiss franc, and US dollar, Japanese yen. You can then expand on that, but there's certainly not hundreds of thousands of companies in relation to the most traded currency pairs, which is also makes it really nice. It works mainly off technicals rather than fundamentals like companies. It's a 24-hour market. You know, whether you are a shift worker, part-timer, full-time employed business owner, or 9-to-5, like we covered in last week's webinar, you still have the ability to trade, which is always the best reason why. But for Chris and I, it came down to that life-work balance. Our life that we lived was small in comparison to the time that we spent at work, and that was our biggest reason why we wanted to learn how to trade. You've got to get that life-work balance. It is so important. And this was one of the things that changed us, is that I saw this quote: never get so busy making a living that you forget to make a life. And that became one of our biggest reasons why. I remember last week I spoke to you about finding a big reason why. And that was a big reason when we first started to trade, is because we wanted to make a life rather than just a living. So in last week's presentation, we went through what to trade, looking at your working environment. Again, if you're a 9-to-5, a shift worker, part-time employed, retired, or your own boss, and taking that and having a look at what pairs would be best suited, looking at your expectations and your reason why. Now, a quick show of hands, can I see how many of you are either on that webinar or have watched that recording that we sent through to you? Fantastic, most of you. Right. If you haven't watched it, look in your inbox and look for the link. Chris has left it up for another 48 hours, and then we'll be taking it down. Right. So that's what we covered in last week's presentation. So what are we going to do in this week's? Well, we're going to look at how to trade. Now, this is going to be based on analysis, and what is KISS trading. Following on from this webinar, we're then going to move into the next one towards the end of the month that is going to show you how to KISS your trading. So in order to make the correct decisions, you have to do thorough analysis. Now, this is where people their biggest downfall comes is in the analysis. Either they not 100% sure what they're doing, they're not confident in what they're doing, they start to self-doubt, they start to overread the charts, and all of this combined is where the problem lies in most people's trading. Now, analysis is done by using tools such as trend lines, support and resistance, and indicators. Those are the three factors that make up your basic type of analysis. And then you top that up with news announcements, having a look at the news, if there's any announcements out, what's important, what's not. We have a look at money management, trade management, and risk management. Now, having a look here at a plain chart, what I've chosen here is a candlestick chart. You can get a bar chart, candlestick, line, or tick chart. Candlesticks are always the most visual, and that's why we use them at Serene. Looking at this particular chart, it makes it very easy. Think about it. When the candle is white, it's hollow. It's got a lot of air in it, so it's rising. So in that particular time frame, it has risen. Price has risen. When it's black, it's heavy, it's full of concrete, and it has fallen. So we get a quick idea of just looking at this particular chart, what is happening in the market. Now we can see currently here over the past couple of months, this is the pound US dollar chart, price has fallen drastically. Every single one of those candles are dark. From there onwards, we might want to add maybe some moving averages. Now, moving averages are trend indicators. They give you an idea of price, whether it's trending up or down or moving sideways, and there are plenty other ways that these moving averages can help you with your trading. They are my favorite indicator of all time because of its very visual way of showing you what is happening in the market, and that's something that we're going to be teaching you. Then from there we might want to start looking at adding some trend lines. There's a saying, the trend is your friend. If you know how to read the markets, it could be. If you don't know how to read the markets, it won't be. Now, when we're looking at a trend, we're looking at areas of support and resistance as well. They're either moving up, down, or sideways. So we'll add those to our charts as well. From there onwards, we might want to start thinking about adding support and resistance. Now, in our next webinar, I'm going to be discussing support and resistance in quite a lot of detail. But you adding your support and your resistance lines at levels where price has changed direction, because this is where price can possibly change direction again into the future. So we can start by putting our blue line right there at the top, saying that was the highest point where price changed direction. We can then see some consolidation around this area here, as well as back in this area here. Again, we can see some support along this level and carry all the way down to the bottom, to the lowest level where price has gone. Now we've added some moving averages, we've added trend lines, we've added support and resistance lines. Our chart is starting to look a little busy, but it's all right. We can see what's going on. Then we add a couple of indicators at the bottom. Now, indicators that we use at the bottom are always there to determine momentum and to determine trend and to determine strength. So it's always good to have some indicators that are going to be backing up the direction price is moving. So we add those two in. Then you learn a little more, and you learn about maybe things like Fibonacci. Now, Fibonacci is a technical tool, but it will give you alternative levels of support and resistance. Now, by adding them to this chart, you can see in certain levels, obviously your highest point, sorry, let me find my cursor, your highest point, this level over here also was a long-term support and resistance, but also a Fibonacci level, the 50% as well, and going down. So now we've added those onto our charts. Then we decide, oh, I've just read in the book about Bollinger Bands. They look cool. I'm going to add those to my charts as well. So you start to add Bollinger Bands. Bollinger Bands is an indicator that governs where price is potentially going. If it moves to the upside of the Bollinger Band, you're looking for buy signals. If it moves to the bottom side, you're looking for sell signals. So you think, oh, that's a great idea. Let me add this to my chart as well. Then you get a book and you learn about some more indicators. Now, let me tell you, there is probably over 3,000 different types of indicators that you can use on your chart. So you add another two just to give you more confirmation about what is going on in your chart. And what you end up with? Analysis paralysis. Let me just take it back for a second here. Can you remember the first chart that I showed you, that simple, plain, black and white chart? How clean it was. You could see that price at that stage was moving down towards the side of the screen. Now that you've added everything that you feel is important to help you give the best decisions in your trading, you can barely see where price is now. Now, the reason why I brought this into tonight's presentation is because a lot of our students have come to us with charts looking like this and wondering why they're losing. Now, there's such a thing as overcomplicating your system. With trading, the simpler you make it, the more money that you'll make. Because the simpler you make it, maybe in the beginning, the harder you have to work. But when your charts are clear, you can see from a distance what is happening. And that's what I always try to install in people. If you stand 20 steps back and look at your screen and a picture stands out, that's when you know you've got it. You don't need hundreds and thousands of indicators all over your screen blocking where price is. What this is going to do is lead to confusion, because when you've got so many lines on your chart, you're always going to be concerned. Should I enter? Shouldn't I? There's not enough in the trade, or my stop loss is going to be in the wrong place, or it just causes too much confusion, which ultimately leads to frustration. That's probably a picture of me biting my computer at times when, especially when I first started. But don't get me wrong, I still get frustrated now. And indecision. And indecision is the worst place that you can get in your trading, because when you're indecisive, either you don't take a trade or you take a trade that you shouldn't. It doesn't mean that you take a trade that you should based off your analysis. You are taking that trade out of confusion, frustration, and indecision. So that's a bad place to be in. What we need to do is think of things in a more clean way. And I can tell you from my heart, and from Chris's, we've both worked for a couple of training companies, and they are going to go out there to try and confuse you. And why are they going to do that? Because the more they confuse you, the more you're going to have to pay them for them to unconfuse you and to train you. So whatever you do, whatever route you take, and whatever company that you take it with, make sure it's always a very simple route, because that's what's going to get you where you need to go. Now, just because you think something is hard, it doesn't mean it's unachievable. I saw this clip and I thought it's fantastic. It's going to get harder before it gets easier, but it will get better. You just got to make it through the hard stuff first. And I think that's anything in life, not just Forex, but think in this case, if you can get through the hard stuff and understand and get educated in what's right and what's wrong, it can only get better. You've got to learn what is important and what's not. You've got to take this mumbo-jumbo picture here and say, what is important? Are Bollinger Bands important? Is Fibonacci important? Are these moving averages important? Are these other indicators that I'm using important? And start to realize what you should be using and what you shouldn't. And that is when we start to use our KISS Your Trades idea and approach to trading. Now, just to humor me a little bit, I want you to write in your text box there what you think KISS stands for. I will start to give you a clue. Keep it serenely simple. I know that it does stand for something else, but we've always kept it as keep it serenely simple. I would never call you stupid in the first place, but the thing is that our whole concept is keeping it on a serene path, just a quiet, calm, and an uncomplicated way of looking at it. So keep it serenely simple. And I want you to bear that in mind every single time you look at the charts. I want to kiss my charts. It's a good way of remembering that the simpler that you keep your charts, the better you are going to get at your trading. Now, the key to keeping things simple: get educated, know what is right and know what's important, so you don't use things that are not necessary. Approach the market methodically and have a plan. We started to create a simple plan last week. Again, if you haven't watched that, go and watch it. But these are the first steps that you need to take in order to get your trading on path. So looking at all of this, it makes me dizzy even looking at the thought of this, but I can promise you one thing: when I first started trading, my charts looked even worse than this. I had every indicator on there possible. I had different softwares and I was combining the whole lot together. I've been through that, and I think so has Chris, and we realized that we had to take a step back and figure out what was important. That is the exactly same chart that I've shown you using the Forex Made Easy strategy. It is made up of a couple of indicators. There's only 3 support and resistance lines there, because that's what I'm going to teach you, is that you don't need hundreds of lines. You need the important lines. But that whole complicated setup that we had before with all those strategies is all compiled into this. Can you see how much clearer the charts are, how much more they stand out? What we've done here is green is up and red is down rather than black and white. Makes it more visual, more solid. And this is the Forex Made Easy strategy that you're going to see with Chris in a couple of minutes. Or when you move up and up the ladder and onwards, the FX Ultimate H strategy. It's exactly the same chart using the same principles, and there are 8 different indicators placed on this chart as well, just based in the box to the right hand side. So if you haven't already, make sure that you book onto the next webinar, because what we're going to be doing is creating a KISS strategy, a Keep It Serenely Simple strategy. So you can see how just a few things put together can create a simple strategy. I saw this this morning and I thought, oh, I have to share this. The only place success comes before work is in the dictionary. And that is so true. You have to be prepared to put in the work. There's no such thing as an easy ride. But if you're prepared to do that, that's when you get your success. The Forex Made Easy strategy, as I've said to you, it's a simple strategy, and this is obtained through the Forex Made Easy course. I see that a lot of people were on the webinar. I see that a lot of people watched the last one. I'm not going to go into a lot of detail on this. If you want, I can send you through the last webinar details again. But Forex Made Easy is an online training course. You get your course manual that will go through the course entirely, page by page. Along with that, you get 6 different DVDs which cover your basic beginnings. It will take you right from ground level. Even if you think that you're advanced or intermediate, I can promise you right now, we will always take you back to grounding, because so many people that are already on the path already have been taken up the wrong path and using the wrong technical tools. Fundamental analysis, we're going to look at the news, where to find it, what's important, what's not, why to trade, why not to trade. The technical analysis, this is the biggest part. and to me, what is the most important part of your trading? Understanding trend lines, support and resistance, how to plot them correctly. If you get them in the wrong place, your entry is wrong, your stop loss is wrong, your target is wrong. And I know I keep on going over and over about that, but that is why it's so important. You can get into the trade at the wrong time, put your stop loss in the wrong place, your limits in the wrong place, and all of a sudden you don't have a winning trade. Look at chart patterns and all the different types of indicators. This 4 is about trade management, what to do when you're in the trade, money management to ensure that you don't blow your account, basically, and personality management, teaching you how to trade in accordance with your own personality. Disc 5 is about getting a broker and using it, everybody's own personal preference. We don't mind who you take, but we can't learn every broker. So we do use FXCM. This is teaching you how to open an up account, how to navigate your way around the platform, and how to actually place a trade. Number 6 is your winning strategy. Now this is going to take every single one of those different lessons and combine them all together with a strategy that you can implement straight away. It's downloadable. You can download it straight onto your platform and start using it immediately. It's a great strategy. It's the one I've just shown you. It's simple, it's clear, and it will give you so much confidence with your trading. You're going to get some bonuses with that, what the professionals wish they knew, which is going to give you an extra 5-part training course. It's going to show you the best times to trade and what pairs to trade. Really, really important. The deadly sins of Forex trading and why 95% of traders fail and how to avoid their mistakes. The next one is check the boxes. This is going to be your checklist, your analysis. You have your sheets of paper next to you that's going to guide you through everything that you should be looking at the charts before you place a trade, as well as the daily steps of professional traders, which is what Chris and I do on a daily basis. After 16 days, we're going to send you the currency correlation strategy, which will help you triple the amount of money in the same period of time should it be set up correctly. All of this is just £297. You can see this on our website. And last year we did a promotion. We decided to run it again in January. We are offering a one-day live training course of the Forex Made Easy. It will always be held in London Heathrow between 10 and 4 p.m. And here we're going to do hands-on analysis of Forex Made Easy strategy. You're going to get a clear approach to understanding and applying that currency correlation strategy. You're going to look at technical and fundamental analysis in action. We're going to look at defining your trading plan, look at how to master your trading psychology, and we're going to do a bit of group analysis using that Forex Made Easy strategy so you're ready for the Monday morning trading. Doesn't end there. We're going to allow you to bring a friend along with you to experience it for £100 more. Now, the thing about doing it with somebody else is that you've got that support network there already. There's nothing better than sitting down with a friend and analyzing the charts and sharing your views. And at the end of that training, I'm going to give you a voucher back for £297. That means that you could get this course completely free should you decide to further your education. So what you're going to get, Forex Made Easy Online, you do this as a pre-course homework. So what's the benefit behind that? You get to go through the entire training before you see Chris and I live. So you can get all your questions, any frustrations, anything that you're not understanding can be covered here at this course. You will also get your one-day live training course, your second ticket for just £100, only should you want to bring a friend with you, and your money-back voucher on completion of the course, as well as lifetime access to the VIP Traders Lounge. It's just £297 plus £100 per person. But this is where it gets interesting. So many people out there are looking for more. They want a constant support network. They want somebody to confirm the analysis that they're doing. They want contact with people. They want to talk with other people who are doing the same things as us, maybe a trading buddy or step-by-step coaching. And this is where our year-long professionals course comes in. We started this in July last year, and the results, as you saw from the last webinar, are amazing. It's divided up into different phases. You will need to get through your first phase in order to progress onto phase 2. Then you'll be given homework and criteria that would need to be met to be moved on to phase 3 and so on. You will start with the Forex Made Easy online training, then move up to FX Ultimate 4 and FX Ultimate 8. Then you will come and live with us in our home for 2 days and 2 nights. And we will be doing private Skype training sessions as well as group training sessions with you throughout the year. You get put into a personal Skype traders room where you can talk with Chris and I on a daily basis, ask any questions, get our views on the markets, and we're going to help you develop your trading plan. Once you get onto FX Ultimate 8, your charts are going to look like this. You're going to get confirmation, you're going to get confidence, and this is where your trading is going to take off. So why do traders rate this training? Well, the strategies are visual, it builds confidence and consistency. Having somebody to check your trades before you enter them as well as whilst you're in them gives people so much more confidence. Having one-to-one support on a weekly basis, even on a daily basis, is keeping up the momentum, and the cost of the training is less than any other educational program out there for what you are going to receive. But best of all, it is a results-driven program. You have to get results in order to move into the next phase. So you're motivated by the results, and we're going to help you get to that stage to be able to move you on. So it's a win-win situation for both parties. I haven't changed these, but Saminda, I said on the last one, had made 779 pips after being on the year-long professionals for just 5 months. His update today was he was 104 pips up for January so far and on the track to achieving his monthly targets that he had set himself for FX professionals. Demi, he made in November 892 pips in 3 weeks, 120 in December, 255 on his first week in January, and this morning he was still in 2 trades and he was up on both of them. They weren't closed out, so they're not counted as yet, but as a long-term trader he is still in those 2 trades, but he is in profit on both of them. Fantastic. Glencord, we showed you that you do have losing trades, but at the end of it, as long as you are, in this case, 519 pips up, you've got nothing to worry about. Today, I had spoken to him. He had made his weekly target in just 2 days. So Monday and Tuesday, he had made his entire week's target with new trades that he had placed. So that's great as well. Graham, not one losing trade on his live account since starting the year-long professionals training, and he still hasn't. Sean Voss, he has been with us for quite some time. He started back with us in 2012 and wrote here that he has not had one losing month. Not saying not one losing trade, not one losing month since he started with us back in 2012. Neve, I was hoping to have caught up with her this afternoon. Unfortunately, I didn't, so I don't know where she is, but the fact that she managed to turn $54 into $720 in a couple of months using money management and our strategies is absolutely fantastic. Jenny McCardle, who made 200% in 12 months following our education and our strategies. You can't go wrong. As I said, as long as you're prepared to stick to the approach and put the hard work in, these are the results that you could be getting yourself. So with a year-long professionals training, it is £4,000. It's £1,000 due on booking and 10 monthly payments of £300. Our January special, that is available up until the 30th of January. On the 31st of January, this will no longer be available. Your first payment is £500 due on booking, and thereafter 10 monthly payments of £300, a year's training for £3,500. And you know what? That is just £9.60 a day. That all it works out for you to get educated, get on top, and start making some money. But it's your decision now. I just got off the phone with one of the students from the last webinar just before we started. And I think it was quite amazed the fact that we're not salespeople. It is your decision at the end of the day. And that is exactly what it is. It's up to you whether you want to go down the road of success and learn how to trade and make money and change your life. And I found another clip today that amused me. Average people would rather be entertained than educated. Rich people would rather be educated than entertained. I'm not here to entertain you. I'm here to educate you, and we will do our best to ensure that you get the very best education that you can get. If you've got your pen and paper ready, write down our Skype details. Send us a Skype request. Tell us that you are one of our students, and we'll be able to accept you on that. Follow us on Facebook. A lot of information gets posted up on there. Our webinars get put up there first. Analysis, trade results, testimonials are all put up through there. And please to add customer services at sereneeducation.com to your contacts. We are slowly going through our database to contact people, but I do know that a lot of our emails, if you especially got Yahoo, Hotmail or Google, are going into spam folders, unfortunately. So what I'm going to do, I'm going to hand you over to Chris now. He's going to run through some analysis with you using the Forex Made Easy strategy as well as the FX Ultimate 8 strategy. I'm going to be around to answer any questions. So if you've got any questions as Chris is going, or anything that I've covered, or anything in general, type it into your box and I will have a chat with you as he goes through this analysis. So thank you for joining me this evening. I'm going to hand you over to Chris.
Hi everyone, thank you so much for joining us this evening. Thanks for taking the time out. As Nikki mentioned, I'm going to go over the 4 majors. I've got the 4 charts in front of me, clear, clean charts, nothing on them. As Nikki mentioned, price is where everything is built on. Every single indicator, and there are hundreds of them, are based on price action itself. So it's far better to understand price in her nakedness. It's probably the best way to use it. So I'm going to do 2 of them with the FME, the Forex Made Easy template, and then I'm going to do the last 2 using the FX8, which is the big daddy of them all. Just to give you a feel of why we start with the FME and how we get to using the FX8 and the benefits of the FX8 at the actual end of it. So I'm going to crack on using the FME on this particular pair, the euro against US dollar. I'm going to now apply the chart. We do use MT4, MetaTrader 4. The great beauty of it is there's no cost involved. Okay, that's a big plus these days. The benefit of MetaTrader MT4 is it's no cost involved. Okay, that's the beauty. The only cost you would pay for is obviously through your broker and their spreads. Okay, so that's a big plus. So to apply the FME template to this particular chart, all I need to do is obviously download it, and we'll go through that process at a later stage. But just to right click anywhere on the chart, go down to templates, and then find the FME, and once you've done that, you'll see it pops up onto the chart. As Nikki mentioned to you, nice and clean, very visual. The beauty of this though is just the 2 moving averages, primarily the 50-period moving average and the institution moving average, 50 in purple, institution in green. We have an RSI, relative strength index, plotted on the bottom here. You can see it in red. We have, and then we have the MACD. MACD, we use the MACD primarily because it's a trending indicator, so it's fantastic for trends. And the reason why we want to be trading trends is because there's momentum, there's direction. We don't want to be trading consolidation. So if you're looking to trade, got to be trading trends. The trend is your friend, as Nikki mentioned, and that's obviously got to use the indicators that best suit those potential setups. Price action that's trending, then you got to utilize the tools that best suit that. Okay, then we've gone one step further. You'll notice a lot of vertical lines on the chart. Those vertical lines are there for a reason. They're part of the algorithm, and they give us a vertical line when the entire setup sets out a particular buying or selling opportunity. That's a big plus because it's doing most of the work for you. Happy days. Having something that's actually giving you a valid signal, all we have to do then as a trader is to then verify if that's a genuine signal or not. As Nikki mentioned, you do have to do some of the groundwork, let's put it that way. Okay, do the analysis prior leading into during a weekend. In fact, will probably be the best thing to do is to look at how the prior week has gone. You can then work out what's likely to occur the following week just by looking at what the indicators are telling you on the chart. So that's exactly what we do as traders. We have to visually build up a picture So if you are very artistic, if you find it very easy to find charts or to look at pictures, etc., like, and build up pictures, then you're going to find trading quite easy. Those who find it very difficult, it's something you're going to have to work with, but the longer you apply it, the lot easier it does get. Because most of the work is done in your prep. By looking at long-term sentiment, i.e. trend direction, whether price is consolidating or ranging, is it happening around major support and resistance levels, consolidation levels, are we seeing a breakout or continuations? If we get all that sorted out when the market's closed, we can then basically set up some sort of idea of what's likely to occur the following week. So then we set up requirements. The best way of actually putting it into emphasis is trying to keep your trading very mechanical. The emphasis, especially when I show you the FX8, you will show the reason why we've kept it very clean, very mechanical in its approach, very much like a tick list. A lot of our students who are online tonight will be nodding their heads, because part of the whole process is doing exactly that. We prep you, we try and grind it into you that you've got to have some sort of checklist, and doing that repetitiveness over and over again will then get you to a level where you're just doing it naturally. It should become natural. You should be able to look at a chart and within the first 5 seconds know exactly what it is that you want to see or do from that going forward. Clearly, on here I've got the daily time frame. What I tend to do is look at the bigger time frames. I always, like Nikki mentioned to you, always stand back, look at what price has been doing. Obviously, the bigger the time frame, the more data you can see, the more you can see what price has been doing over a period of time. Now, the one thing that really stands out when you look at euro against US dollar, especially since 2007, and this is the 2007 highs that we saw way up here, when things were doing fantastically well, you can see how the market was trending beautifully then. We had beautiful moves, it pulled back and then moved, pulled back, moved, pulled back. But we had, especially through the 2004, 2005, 2006, all the way up to the 2007 period, we had a beautiful trend, a fantastic trending period. And look what the market's given to us since 2007. It's been moving between a couple of points, but gone are the days where we had clear directional movement. We've now had to change our philosophy, our perception of the markets. There's a lot more hesitation in the market. There's a lot more speculation in the markets these days. If you want to trade that, you've had to change. Get rid of that mentality now, and you've got to then say, great, the market's more speculative, so therefore you've had to apply a strategy that's going to incorporate speculation on the market, and then try and pick out when you're seeing a genuine movement when in the market, unlike if it was just a fake out. You'll notice that price has been moving to a number of points. In particular, the ones that really stand out are these two levels down the bottom over here, which were the 2010 low, which happened to be on the institution as well as the 2011, 2012 beginning here. There again, back also at the institution. So now when you look at price, what she's been doing over the years, she's made high. She's always corrected herself at a specific point, and she's corrected, and she's moved higher again. But not once over those years has she been able to break the prior high. Remember, if you're seeing movement in the market, ideally you want to see prices making new highs. If she makes new highs, then there's likely for you to see a further top. So if you look at these two current ones that happened through, say, 2009 and the 2011, you'll notice that the highs going forward into time were less. Here particularly, we saw the 2011 high failing to break above the 2010 high. And then subsequently here, we didn't even get any close to that. So you can see that as the euro has moved on through the years since 2007, we've seen price moving to a low point over the years, but subsequently always pulling back at a specific point. Okay, and what we've seen out of that is clearly two occasions on the long term where we've seen potentials for bias to the upside and then bias to the downside, bias to the upside and bias to the downside. And you can quite clearly see that euro US dollar at the moment now has been going through negative sentiment of recently. And when I say recently, I'm talking the best part of 2014 through to where we currently stand right now. Now, the setup is fantastic in itself. You'll notice here, if we're just looking at the monthly time frame, you'll notice that I got a vertical line some months back. In fact, if we look at that month over there, I think we're looking, when was that? Last year, the 8th. The 1st of the 8th of last year, we had the vertical line appear, and the vertical line appears when we have the MACD histogram dropping below the zero level, the crossover, the moving average crossovers. There's a fast pairing moving average crossing the lagging period moving average, which is the red. And we also had a bearish engulfing counter closing below the 50 period moving average in this case. So now, and we also had a break of this intermediate trend up. So that was a clear signal to potentially look for selling pressure, selling orders to the downside. So now if you got that, you got to say to yourself, well, okay, great. What has price done in the past every single time she's failed to make any new highs? She's always fallen, okay? She's fallen back, and she's fallen back to a specific point in the past. So now if I know where that specific point is in the past, then I have a valid target level. And that target level should have been the institution moving average. Why? Price actually fell to those levels on 2 prior occasions. So therefore, going forward, that would ideally be a valid long-term target. Okay, and you can clearly see, if you're just taking that opportunity there on the close of this signal over here on the low of that candle, take it to the institution, you should have been in excess of 800 pips in profit just on that outcome. You're not going to get all of it because you've got to weigh in the spread and your entry, etc. like that. But roughly say 800 pips of there would have been clear profit if you just taken that signal. And once you got to this institution moving average, for example, you could either close your entire account or you could have closed a position of that and let the remainder run. Because you can quite clearly see something that's very, very, very negative has actually happened right now on euro. And the fact is that on December, we actually saw a physical close lower than the institution for the first time in 4 years. Yes, back here in 2010, we actually saw price trading lower than the institution, but it closed higher. Here again, we saw price testing the institution. Okay, got all the way right down to the bottom here, but it still closed higher, and the bias to the upside came in. Okay, we had a morning star here, we had a hammer formation. Here, on the other hand, we've seen price starting the month of December to the upside. However, as we progressed through the month of December, more selling came onto the market, and subsequently we saw a closed lower, which is a very negative indication, especially for a price that's been to be supportive over the last 4 years. Now she's clearly not being supported, and the fundamentals will back that up. A lot of negative data came through for the Eurozone, which in fact pushed price lower as we've headed into the new year. And you can see the outcome this month alone in terms of pip value. We've seen close to 300 pips, okay, of movement alone for this January. Now you think to yourself, 300 pips, it's not much. But when you start breaking it down into pip ratios, if you're doing at a later stage, you can do £5 a pip, £10 a pip. You can start seeing the actual value of where your trading can take you in terms of time invested. That candle over there, just by looking at the sentiment, knowing what it is you should be looking for going forward and how she's played out, gives you a valid entry level and a valid target, and also further targets going forward. So now we've broken through the institution moving average. Now on this time frame, where is our likely target, next target likely to be? Well, there's one right now. We've seen a bit of a consolidation area around here, and this is what's likely going to happen going forward for maybe for the end of this month, but going into February. With any breakout, you're likely to see some sort of pullback. It happens 90% of the time. Could be funded by just movement, clear movement fundamentally on the market. And we have a very, very important announcement later this month that could have a factor of that, and that is the Greek vote. We have a potential first support and resistance level where price is trading right now. The RSI is going into the 30 level, which is classified as an oversold territory. So we could see a consolidation. The MACD histograms are still making lower lows, which is fantastic because you want to see that in a trend, and we're on a negative trend. So that's perfect. The one thing we've got to see is the RSI is going to negative territory now, so we could expect a pullback. It's not telling you you're going to see one right now. It's telling you we should be looking for that. Below that level, there's another opportunity here as a second target. Third target here, another consolidation level, and fourth target from the lows we saw in 2000. So you can clearly see if it gets below this level here at 1709, we could see further profit targets of roughly around about 770 odd pips to that level. Get below that level to the next target, there's an excess of 900 pips to that one. And heaven forbid we actually get to these lows, we're seeing an excess of 1300. So in terms of time invested going forward for 2015, there's a hell of a lot on the table to be made. And as things stand at the moment now for Eurozone, things haven't been great. In fact, we've interest rates trending near to zero, inflation below zero, which is not really good for Eurozone. So a lot of things are pointing to the negative side for Eurozone. So that's how the actual FME is coming to play. Very simple, very basic, but you've got to start from the bigger time frames and work your way down into your smaller time frames. The next one would be sterling. Just going to bring up sterling quite quickly on the chart, and there she is. And you can quite clearly see what's happened since 2007. Here again, as I mentioned to you, a lot of beautiful movement, lots of trends, not as great as the euro, but trends nonetheless, pullbacks, and then further continuation patterns. Fantastic trending if you know how to do that correctly. Look what sterling has given us since then. I mean, for goodness sake, it's been absolutely crazy. It's just been nuts. She's been very, very skittish. In fact, something out of a straitjacket scenario. However, you'll notice hard right edge, that's where we make all our profit. You can quite clearly see that price has just been ranging. But near term, even though we've seen better outcome for sterling against a very weak euro, we're still heavily influenced by Eurozone because it's our closest trading partner. So what happens in Eurozone eventually catches up with us and effectively has a negative effect on sterling, and that's clearly what's been happening. So here I've drawn the FME on the chart. Clearly you can quite clearly see that here again we've had a beautiful opportunity, the latter part of 2014 in fact, to capitalize on the negativity that we've seen. Notice we've got another vertical line appearing. Okay, and if you're taking that opportunity just alone on the entry of that candle to where price is trading right now, there should have been an excess of 800 pips. Okay, that would have been clear. 3 months of trading, 800 pips. Pound per pip, that's 800 quid. £2 a pip, that's 1600 quid. £3, you get my meaning. Okay, so it does help a hell of a lot. Doing this and keeping it as simple as possible and getting a bit of help from the indicators goes a long way in actually making it a lot more profitable and keeping it very mechanical in its approach. Price is trading right now at a current major support and resistance level, especially this one that we saw through most of 2013. In fact, we saw a number of months of consolidation here. Price is trading at that level right now. You can see this month we've seen price trading lower than it, but it's kind of pulled back so far and it's at that level. So we could see January finding support above this level. People will be vigilant, they will be trading into this level. So if they sold way up here where we got our selling signal, that would have been their long-term target. They're added right now, so they're obviously going to capitalize from that. So they'll be selling some of that back into the market or closing those contracts. Those contracts go back out again onto the market. As you mentioned, for every seller there's going to be a buyer. For every buyer there's going to be a seller. That's the beauty of trading, and subsequently that's what's happened. But you can also see that the uptrend is in place right now, so we've got to be vigilant about that. So there's two factors that are inboard right now for price, so we've got to be vigilant going forward. So price is right now at that level. So we could see consolidation as we head into the smaller time frames. You can see the candlesticks are starting to show hesitation, a lot of genuine sentiment to the downside, but you can see the candlesticks now, even though they've traded lower during the course of the start of the week, by the end of play of those weeks, price has always managed to close in the upper part of that trading range or the candle range, which tells us there was more bullish bias, closing of contracts, selling contracts, because as they head into this area, they want to take more off the table, and then subsequently that's what's happening. And you can see on the weekly time frame now, the RSI is well oversold. And you'll notice as price has been falling, the MACD has been converging, okay, back. Okay, so it's telling us we're starting to see slowdown. But that's clearly going to happen because we're trading into a major support and resistance level going forward that we've got in our monthly. So that's bound to happen. So that's the beauty of having the FME as a starting platform, because that's what we want to do as traders. We want to start off somewhere, get to understand the reason why we use indicators, when they're best utilized. And once you understand all those things going forward and you understand the time frame that you're going to be trading from, which is very, very important. Everybody wants to be an intraday trader. However, they're all working 9 to 5. It's impossible. The biggest thing about learning to trade is to have a strategy. Okay, what does I want from trading? How much do I want to get from trading? Okay, what are my time frames that allow me to trade currency? And you have to vigilantly trade on those time frames. So if you're doing a 9 to 5, then you're going to have to ideally look at end of day trading, or maybe if you're lucky, go on a 4-hour time frame. Very lucky. Okay, but you have to start by getting those set in stone. The stronger the foundation, the higher you can go, and that's it. The next one is I'm going to do the US dollar Swiss franc, but in this case, I'm actually going to bring on board the FX Ultimate. The beauty of this, guys, and all the students out there who have done the FX8 program will be smiling. The beauty of it is this little indicator box over here does the majority of the work for you. As I mentioned to you before, keeping it very visual Very simple visual. You would not look at this chart and know that there are 8 indicators all working to give you this. You're looking at it going, Chris, come on, you can't be serious. There's only 1, 2. There's 2 indicators, 3 moving averages, and a whole number of red candles, and 1 or 2 blue and red. Where's the 8? The 8 are all built into the algorithm that gives us the blue and the red signals, guys. And the color of the candlesticks. Apologies, I forgot about the candlestick color. And the candlestick color is also vitally important, because if you're in a downtrend, that means negativity. Wouldn't it be nice to have candlesticks that represent that? Oh yes, and they're all red. What we're doing is, by using colors, is telling you what you should be looking for. If it's all blue, then you should be looking for the bias to the upside. So you're saying, well, Chris, it's all negative here. Why is it all blue here? Well, it is blue. Okay, remember we're looking at a monthly, weekly, daily, 4-hour, hourly. Okay, and the hard right edge is where we're making the money. And that's where it is. Because if I zoom in, you'll notice that the candlesticks are blue. But we need an arrow. The first part of this strategy is we need an arrow. And the candlesticks need to complement the arrow. And the RMO needs to be above the 0 level to complement the candlesticks to complement the arrow. And we need the OSMA, which is a hybrid version of the MACD, to be bright green to complement the candlesticks, to complement the RMO, and to complement the arrow. And when all these work together, it's giving you a clearer picture of where the bias lies. So just by looking at this, you know that the monthly, the weekly, the daily, the 4-hour, your long-term sentiment is up. Therefore, when you're looking to trade intraday, if you want to trade intraday, ideally you want to be trading with trend direction. Now, if the monthly, the weekly, daily, the 4-hour trend is up, you need to be trading up. So your indicators or your bias intraday needs to be positive to be trading with that trend direction. That's the beauty of it, guys. Trend up, blue candles. Trend down, red candles. Perfect. RMO, when the trend is negative, RMO is below the 0. Look at that. Okay, when the trend is up, the RMO is above the 0. Look at that. It's very visual. Very visual. And that's the beauty of this particular template, guys. This is what you want to be striving for. Something that's doing all the work for you. And then when you apply your fibs or your support and resistance level, your pivot levels, you're looking for breaks or major support and resistance levels. Here you can quite clearly see US dollar Swiss franc has broken a major consolidation area. At this specific point here, in the past, price is consolidated support-wise. Since then, she's been negative. She's always pulled back, resistance, resistance, resistance. But here on the hard right edge, you'll notice that the US dollar Swiss franc, for the first time in 2 years, is now trading above it. Hence the reason why the candlesticks are blue, because it's telling us it's genuine buying. Here it wasn't genuine on this. It was just consolidation in what was still very much a negative trend. Here, visually, the candlesticks, the FX8 is doing that for you. It's telling you, wake up, up. We want to go up. So when you look at the markets going, I don't have a strategy. Should I be buying? Should I be selling? Should I be... You're wasting time. Here, it's telling you straight away. There's no ifs or buts. You just go, great, it's up. Great, where's my target? If I get in now, where's my lucky target? Straight away, I know exactly where my target is. I can then work out where my pip return is. Oh, 1100 pips. Fantastic. Where's my stop likely to be? Underneath here. So if my target is 1100, stops at 500, 2 to 1 in fact, perfect. Enter targets. Okay, it's very, very quick. You're making your decisions very, very quickly, and you're keeping it very mechanical. That's the most important part of it. Keeping it very, very mechanical in your approach. So that's the US dollar Swiss franc out of the way. US dollar Japanese yen. Last one today. Now again, a naked chart. I'm now going to apply the FX8 Ultimate Template onto this. Straight away, on the monthly, I get a buy signal. This is another beauty about the template, is it'll give you alerts. And it'll tell you on what time frame the alert is on. Here again, the indicator box, long-term, monthly, weekly, upside. However, you'll notice there's a lot of red on the intraday time frames. Uh-oh, not good. You can see that the US dollar Japanese yen has been very, very positive. However, we're seeing a bit of negativity. And there's a valid reason for that negativity, guys, because look where price is trading right now compared to where she was in the past. Okay, we are trading at a major support and resistance level. A lot of consolidation happened in the past at this specific point. So anybody who's bought along this route, i.e. if they bought down here in 2011, for example, or they bought over here in 2014, the last part of 2014, their target, remember, when you get into your car, you got GPS, you plug in your destination. Okay, you don't get in your car and you just drive aimlessly around the countryside. You have a destination, and it's Trading is exactly the same thing. You must have a valid reason why you're taking the trade, and you have to have a valid target, and you have to have a valid stop. If you don't have those in place, don't even bother trading. And the same here. So anybody who bought along here, along this uptrend, would have had a target. And if you bought over here, for example, that would have been a valid target. So now price is at this level. More people are going to start closing their contracts, their buying contracts, because they're going to take profit off the table. Because this has been a clear consolidation point in the past. And hence the reason why we have a lot of negativity now. Because if you close contracts and you're buying, you're likely to see price pulling back, falling. So that would be bearish. So that's clearly. And look what happened to the candlestick in December. It closed indecisive. Okay, spinning top. This is called the spinning top. Okay, indecision. And that indecision is taking place at a major support and resistance level in the past, a consolidation point in the past. So therefore, you can see that the bias is clearly negative at the moment now because more and more people are taking profit at this level. Okay, the candlesticks are still blue. Okay, everything is still long-term, is still positive. So therefore, when I drop down to the weekly, etc., you can see price has been consolidative. Perfect. It's just telling me the candlesticks are still red. So it's just telling me it's consolidation, profit taking in what is already a very bullish uptrend. Okay, so what you need to do now is apply. The biggest thing in trading is patience, because if the candlesticks are positive, then you want to see price making new highs. If price is not making any new highs, then she's likely to be consolidating. The last couple of weeks, price has hesitated, and we saw a bearish engulfing candle close lower on last week's candle, which has engulfed the prior 3 weeks, which is a negative setup. And you can see this week we saw a slight pullback during the start. However, you can see that the candlestick is now hugging the bottom end of this range. And if that continues to happen, there's more likely for price to pull back. And if we likely see further pullbacks, then you would want to know where the next support and resistance level likely, or our target levels are likely to be. Back here towards the 20-period moving average would be a start. Then the next level would be the prior breakout resistance level there, for example, at 109.92. Next one will be down here, okay, which is the 2013 high, which was the breakout, the pullback, and the continuation level. Yeah, you can quite clearly see, okay, of 2014. So now I have, and as it stands at the moment now, this is the near-term one, is the support that we saw through the latter part of, or the end of November and going to December. So price is trading at that level right now. So going into the end of this week, if price closes lower than this level, you can see I have a red arrow. Okay, and that red arrow is telling me, Chris, heads up, we're likely to see a change in market sentiment. Okay, the OSMI has changed dark green. So in this consolidation, there has been no opportunities to buy. Okay, because this needs to be bright green. She's not made any new highs. Okay, remember, in a trend, you need to see price making new highs to be considered a trend. When price is not making new highs, she's therefore consolidative. Okay, and you can quite clearly see it stops you from getting into trades which is not moving. Okay, so clearly this would have stopped you. It's telling you that the RMO is still above the zero, so it's telling you we're still be looking for the upside. However, there's no true buying sentiment at the moment. But we know that because we're trading at a major monthly support and resistance level. There's bound to be consolidation because people are starting to close their buying contracts. So that's going to happen. So now what we will need to do is for price then to move back in favor of the long-term trend, i.e. above the 121.82.4 and change, for us to then target the next high. Okay, so then you would have to go to our monthly now to look at that level, and there's another one just roughly around that level here, which is the 2006 high, but then you'd have to look to all the way to 2001 for the next high above that level. So you can see how the FX8 in itself helps you when you need to be looking for entries, but also helps you when you're seeing no trading on the market. Okay, periods of consolidation. It'll stop you from making those stupid errors that we all have done. I've done them, Nikki's done them in the past, everybody's done them. Anybody who hasn't done them in the past is lying to you. But it stops you from making those stupid, silly mistakes of getting into trades when there's no true, genuine sentiment in the market at that specific point. And all you need to do is you apply a trigger alert, wait for price to break below those levels. If it concurs with your overall long-term sentiment, then you just look at the target, weigh up the options to see if you're getting a valid return on time invested, i.e. your risk to reward is in place. And if those are all in favor, you just pull the trigger. I know I'm going to say it sounds simple, but it does get that easy if you apply these simple rules, guys. That's it. I don't know if Nikki wants to add any more to that. I hope you guys found that of benefit. Otherwise, thank you very much again for taking the time out to view this, and enjoy the remainder of your week, guys.
I don't have anything else to say other than back us up. Have a great week. I hope you're not like us. I'm just looking out the window. I think we might be snowed in tomorrow. But have a great time, a great week, and we'll follow up with you all in due course. And yep, as Chris said, we hope to see you this year. Take care and goodbye, guys. Thanks very much.